Today is Monday, marking the start of a fresh trading week, so let's take a closer look at the market overview through the lens of wave analysis. Let's start with the first instrument, gold. Everyone loves trading gold. The most popular instrument is gold. I've noticed that among all types of traders, everyone seems to particularly love to trade gold. Gold is known to be a highly volatile investment instrument and can provide substantial profits under the right market conditions. But also remember to carefully manage your risks, because if the market moves unfavorably against you, you certainly don't want to end up losing a significant amount of your hard-earned money. This is very important when trading gold. Beginners can quickly wipe out their deposits here if they mistakenly set a high lot size, greatly increasing their financial risks. Experienced professionals know how to strategically trade gold and effectively manage risks to maximize their potential gains from this lucrative market. Currently, we are seeing an upward trend in gold with the formation of the first, second, third, fourth, and fifth waves. After this point, there is a correction consisting of wave A, followed by wave B, and then wave C. After the completion of wave C, we observe the formation of the initial impulse wave, succeeded by the second corrective wave within the framework of A, B, C, D, and E. This type of correction is a triangle, a corrective figure. Most often, the second and fourth waves appear in market trends, and after breaking the triangle pattern upwards, the subsequent impulse wave, which is recognized as the third wave of growth, may continue its upward trajectory. Therefore, we confidently expect gold prices to continue their upward trend, and it is likely that in early September, gold will begin to show significant growth and increase in value. We currently have a profit of $2,300. We began making purchases last week. Let's take a detailed look at the 4-hour trading time frame. To trade in the direction of the higher time frame, you must also look at the lower time frame. If I observe that the third wave is developing on the daily time frame for gold, then on the 4-hour time frame, I must carefully analyze and look for the formations of the first and second waves in order to accurately identify the beginning of the overall trend. Once we successfully identify the beginning of the trend, the first wave typically represents the impulse, while the second wave serves as the correction. Additionally, we have entered a significant and deep correction that lies within the range between the Fibonacci levels of 38.2 and 23.6. Here the correction ends and we see a breakout of the channel, a retest of the channel, and movement upwards. This was a news-driven upward movement on Friday. Essentially, everything for gold is following wave analysis. There was a question today during the broadcast. Can we sell gold? I do not recommend selling gold at all right now. Firstly, it goes against the current global trend. This is on the daily time frame. The 4-hour time frame also indicates that the situation is actively developing within the established framework of the ongoing third wave. The third wave targets around 1618. If you haven't yet purchased gold from us, you might want to consider seeking out buying opportunities during market corrections. This means waiting for an upward price impulse followed by a subsequent correction before making your investment. The next impulse occurs after the previous correction has taken place. That is, trade during the correction in the direction of the trend, and it's better to look for buys in the trend. It's better not to trade against the trend. That's why congratulations to everyone on gold. That sounds intriguing. Let's pose the question in the chat to find out how much gold each person has earned so far. Share your profit amount in the chat. I'm very interested to hear how much everyone has earned recently, especially from those who decided to invest in buying gold. I currently have a profit of $2,300, but the total growth potential for our business is $8,200 overall. I made an impressive profit of $8,200 with a stop loss set at $712, resulting in a favorable risk-reward ratio of 1:9. Additionally, I gained a $170 and a $150, plus $650, plus $2,300, Nikolai $600, Anya $560. Cool. So, we have $1,400, $145, and Olga with her impressive $850. Great job, everyone. This is an excellent example of how much you can potentially earn. Yes, you can indeed make this substantial amount from just a single successful deal, showcasing the possibilities available to you. Alex plus 3,000. Alex engages in trading activities on a large scale. So there is a total of $1,000. Lot 0.01, $90, $348, Julia $250, Sergey $40, Alena $150, still holding. So which time frames are best for finding entry points? Please advise. I recommend signing up for my training in September. There will be training in September. I will tell you how to find entry points. in as a $170. Awesome. So I'm holding next for $200. Guys, $4,200. This is a record, by the way, among all subscribers. 4,200, I don't even have 2,300. 4,200, so $1,500, great job. RAF 110, well, RAF 110 is certainly not 4,200, but still nice. I'm sure we'll definitely check Tesla today. So, colleagues, great job. I understand that we are all wave traders and have waited for the third wave. I can tell you that everyone's expectations were completely different because we waited 2 weeks for the completion of this correction, and only then did we move into the impulse. And we finally waited patiently for the next significant upward movement. Right? Show the broadcast. There will be a broadcast today. Broadcast, cool. It depends on the deposit. Everything relies on the deposit. Absolutely right. Yes, it's nice to earn even $10. Earning is important, but ensuring you don't lose is essential too. Absolutely right. So let's move on. Let's keep our gold investments. I believe this deal will be more of a medium-term commitment for us and will take additional time to successfully implement. This process will likely take approximately 2 to 3 weeks, meaning the market is unlikely to provide results by the end of this week, contrary to common expectations. So we will have to wait patiently because swing trading, which is a form of medium-term trading, typically takes about 4 hours. On average, it takes 2 to 3 weeks. Therefore, for the time being, let's refrain from making any purchases and allow our profits to continue growing, as it is extremely important in the market to let profits flourish while also minimizing and cutting any potential losses, not the other way around. For some reason, many inexperienced traders often close their profitable trades quickly, while they tend to accumulate losses. Make sure to carefully control this entire process. Now let's smoothly transition to discussing the next financial instrument, which is Bitcoin. Guys, let's take a look. In relation to Bitcoin, I shared this particular picture last Sunday, illustrating that the first impulse wave is forming, which is then followed by the second correction on the daily time frame. After that, we anticipate the emergence of the third impulse wave, which is composed of a total of 5 distinct subwaves. After that, following the completion of the third wave, we subsequently encounter the fourth correction wave, which is composed of wave A, then wave B, and finally wave C. On Friday, my friends, we attempted to purchase Bitcoin right here with subscribers from our exclusive closed channel. So in principle, perhaps someone has already made a purchase based on my thorough analysis. The market in principle and general observation has gone up. I experienced a profit of approximately $700 there as well. But then the market took a downturn on Saturday, Sunday, and Monday, ultimately resulting in me getting stopped out of my position. So, the stop-loss function worked effectively, and that's a normal outcome in trading. It's part of trading. If you take a closer look at my risk per trade, you'll notice I set a short stop-loss while aiming for a large profit potential. Even if we need to attempt it a second or third time, I will still end up making a profit in the end. That's why it's important to control risk. What happened with Bitcoin? My students have already begun suggesting that if we transition to the hourly time frame, we can observe that we've formed this specific model: first wave, second wave, third wave, which indicates that this was the fourth wave, followed by what appears to be the fifth wave moving downward. Upon examining the 4-hour chart, we can clearly observe a 5-wave downward movement. I have students who demonstrated to me that there would be another downward wave in the market, and it actually occurred, guys. So you see, even my students are now surpassing me in their ability to make accurate and insightful predictions about various topics. I believe that if the price has indeed completed this unexpected 5-wave sequence, and if this marks the actual conclusion of that 5-wave structure along with the level that successfully keeps the price elevated, then we might see a bounce and a continuation of the upward movement associated with the 5th wave. If the Bitcoin price successfully consolidates above this critical level soon, it will strongly indicate that the ongoing correction could potentially go even lower, prompting us to seriously consider selling. Currently, the primary task for all traders is to closely monitor Bitcoin, as I foresee 2 potential scenarios unfolding. That is, below the selling level, above the buying level. Let's take a closer look at 4 hours. The 4-hour time frame for Bitcoin is currently in the process of forming the completion of wave 5, which is then followed by a potential B wave. It is possible that this was indeed wave S in the sequence. So here we can view it as after wave 5, we can see an ABC correction, or we can consider it as this model 1, 2, 3, 4, 5. So it's a 5-wave model, meaning after wave 5 an ABC correction follows. We are currently analyzing the market through 2 distinct structures because most trends typically move in 5 waves, while the ABC correction pattern consists of 3 waves. Therefore, there may be a potential bounce in Bitcoin's price at this moment that traders should consider. So today I'm trying to buy Bitcoin at this level. I'm entering the market and setting a stop order behind the wicks. I'm working on a buy. I'm currently working on a buy position, as it's possible that we will establish the formation of 1, 2, 3, 4, and 5, leading to continued upward movement, which would represent wave 5 on the daily time frame. If the price consolidates below the level, I will consider selling. Trade risk assessment. The risk on the trade here is $638 with a short stop. My profit is $9,300. $9,300 is almost 1/14th 150. It's a fairly good trade overall considering the circumstances. If this is indeed the daily level of resistance, then the price likely won't be able to break through it, and we might see a bounce back before aiming for the next impulse. And this downward movement I will consider as one complete movement, 2 parts, 3 segments, 4 phases, and 5 total, thus completing the 5th wave. And possibly this ABC is also correction. I'm attempting to purchase Bitcoin at $700. We're working on buying, guys. We're working on buying. This particular scenario will continue to be relevant within the daily context of our lives. It operates at 5. This indicates that we are finishing the 4th one, and now we will move on to the 5th one. I'm actually much more interested in exploring this intriguing 5th wave. The correction doesn't interest me much. Impulses consistently generate greater profits, making it significantly more advantageous to trade during impulse waves. So let's move on, guys. Next instrument to analyze. Let's take a closer look at oil. Regarding the oil market, it's important to remember that we had a significant sale on oil, and we were anticipating a take at the price level of $16.18. But instead we began to see a market correction occurring. Our market structure includes an initial impulse followed by a correction, then a first subwave impulse and a second subwave. After the correction is done, I will anticipate 345. The market could begin to decline in this structure. Since we began selling oil right here at the precise break of this channel, this also represents the very first subwave in the trend. I want to emphasize once again that, more often than not, I discover that attempting to trade the first subwave is generally unproductive, as the subsequent second subwave tends to pull back significantly, leading to a situation where you are unlikely to make any profit in the end. Or you can exit at break-even, which is what I will do in this case. That's why I might close my oil position at break-even. Next, we will discuss the 4-hour trading time frame. Here, everything is essentially clear and straightforward. This is the first one and this is the second one. Once the second completes, the entry point for the third will be interesting. The third wave will be more interesting to me here, so I'm showing you the situation that no matter how you trade, if you don't like trading the first wave, the second will pull back. Therefore, it's generally more advantageous to trade during the transition from the second to the third wave or from the 4th to the 5th wave, which represent impulse waves. This strategy allows you to set your exit point based on tangible market targets. That's why my oil position is currently at break-even. What is the amount for my stop loss here? The stop loss is set at minus $15. I plan to adjust it and await the correction. It might go deeper, and then we will look for the entry point for the third. That's why while oil is in correction, there's nothing interesting happening. So guys, in the trading market, it often happens that when you hold a specific trade position, this situation is especially true for the initial wave of market movements. In the 3rd and 5th waves, it's easier. There we usually manage to exit at market price, but during the 1st and 2nd corrections, the second one often stops you out at break-even. There's really no point in trading during the initial wave. It's better to trade the 3rd, 5th, or ABC correction after the 5th wave. Let's move on. The next instrument is Tesla. Guys, finally Tesla is gaining momentum. There's growth. Don't forget, we currently hold buy positions on Tesla. Here, a general structure is beginning to take shape. This marks the initial impulse wave, succeeded by an ABCDE corrective pattern. The second wave of correction is defined by this. Breakout from the triangle formation. The triangle is considered a corrective pattern within the second wave. Next, we have a breakout of the triangle, the first subwave impulse. As I mentioned in my update last week, this downward movement we are seeing is merely a correction to the prior impulse trend. A correction is smaller than the impulse. The instinct often exceeds the adjustment. A reversal is indicated when the correction exceeds the impulse. The reversal and wave structure will look different, and you might be transitioning from a downward trend. That's why, for those who patiently waited, I believe you are already in profit now. The market is currently forming the start of 1, 2, then it will be 3, 4, 5, and we will see where the third wave ends, maybe the fourth or fifth in this context. If the first wave is the longest of all, then the subsequent third and fifth waves will indeed be shorter than the initial wave. Upon examining the length of the wave, it is evident that the first wave rose significantly from 213 to 369, indicating that this might be the longest wave observed in this particular trend. I don't believe that the duration of the third wave will surpass that of the first wave, so it's likely we will experience 3 or 4 phases, and at least aim to reach a target of approximately 460. This approach will help us navigate the situation effectively. We're postponing our Tesla purchase. To everyone who was patient and diligently waited for this coveted position, well done and congratulations. I believe we will still make money here, as this is just the beginning of the movement. Guys, our primary target is located right here. The target will be approximately 4,300, indicating that the potential profit will be 5 times greater than the amount at which you currently plan to close your position. Maybe someone. Let's grow profits instead. Hold your most profitable trades for a longer period, maximize your returns from the market, and promptly cut your losses to protect your investments. It's generally more advantageous to experience several minor losses. However, a single substantial profit from Tesla can compensate for approximately 5 or 6 of those smaller losses you incur, resulting in a gain over time. Overall, engaging in trading activities generally yields a gain over time. Specifically, swing trading refers to trading positions held for about 3 months. In 3 months, you can make 5 to 20, 25, 30%. It all depends on how you traded. 3 months might seem somewhat brief, but typically, it is possible to end a single month with a profit. Additionally, a 3-month time frame is generally regarded as a sufficient duration for a trader to effectively evaluate their trading strategies and performance. 3 months. In just 3 months, I believe you can easily catch and recognize such trends. Certainly, there will inevitably be some losses because that is unavoidable. However, overall, these specific trades should be adequately covered by the additional trades that you also need to hold. Not everyone is patient enough. I've realized that. So let's move on. Let's examine cryptocurrency, everyone. Specifically Ethereum. An update on the developments in Ethereum. There was the first, second, third, and fourth. You all remember I said to buy here, set a stop here. We were using 5,000 units. And the target was at 5,000. Here, it was already possible, I think, to close this position yesterday because there was something like a reversal. On the hourly time frame, I observed this distinct pattern forming 1, 2, 3, 4, and finally 5 clear points. I believe that individuals who understand even a bit about wave theory could certainly seize the opportunity to take their profits here. Then there was a downward reversal, and I don't know for now if this will be a correction and then a continuation upward, or an ABC correction downward. Currently, I'm not actively trading Ethereum. However, I do want to share this information. We identified an entry point here, set a stop loss here, and aimed for a take profit that was slightly higher. Just so you know, my students achieved an impressive 1 to 5 return on this particular position. They also entered in a buy. They achieved 1 to 5. We executed this deal. I strongly believe that if you aren't overly greedy, you could easily take 1 to 5 items right here without any issue. And believe me, over time, this will be a success if you take such positions. Because the market simply doesn't offer 1 to 5 deals every single day. Usually it's 1 to 2, 1 to 3. However, to take a strategic position like this at 1 to 5 so swiftly, it remarkably developed for us in just 2 to 3 short days. So we basically made money on this. Therefore, we are not trading Ethereum for now. So everyone, the next financial instrument we will discuss is Ripple. Ripple, guys, I want to show you Ripple. What additional information can you provide about Ripple and its functions? This is our daily time frame for monitoring progress. One of my loyal subscribers kindly sent me this detailed markup for my review. When traders send me intriguing and well thought out markups, I can also share them on Instagram, showcase them to you, and potentially trade based on them if I identify something particularly interesting or noteworthy. Look, here I clearly see the emergence of a notable trend in Ripple. This is the first and second wave. We identified the trend's origin. According to the principles of wave theory, it is understood that the third wave is the longest of all, right? The third item is the longest, aligning with the book's description. The next structure we will discuss is a triangle shape. A triangle is most often a corrective pattern for the fourth wave. Yes, I can clearly identify a model similar to ABCD here, and this particular one is designated as E. I understand this is already wave E. It's quite possible that if Ripple successfully breaks through this triangle formation, it may lead to a significant breakout here, which would present a favorable entry point for traders looking to capitalize on the anticipated continuation of the fifth wave. Focus on the fifth wave. You can enter the market here, set a stop somewhere, and work on this position, but it's 1 to 2. Here, you won't earn as much as 1 to 5 like with Ethereum. However, you can still potentially earn 1 to 2. Alternatively, you can try to find an entry point from wave E on a lower time frame. This is 4 hours when 1, 2, 3 will form, for example. And you are already working on 3 stops for 2 locations to place. I also talk about this in my training, how to work from senior to junior and to enter at the earliest points, rather than, for example, here on a breakout of 1.2. That's why all the different waves in the ocean are interconnected when you analyze multiple time frames simultaneously. Each distinct time frame offers valuable information and represents a specific segment of the market that is actively being executed during that particular time frame. I noticed that the best time frames to watch for trading trends are the daily time frame and the 4-hour time frame. The hourly time frame also has its strength for short-term trades. If you're looking at H4 and H1, where about 5 waves have completed, then there will probably be an ABC correction. H4 won't follow the expected scenario. Therefore, it's important that all these moments are developed through observation, and it takes time. So, Ripple everyone, I'm seriously considering this interesting trading idea. I'm currently not providing any entry points just yet. I'll evaluate how our 41-23 forms come together, but I assure you there will be an excellent execution of the 5 components. The market moves gracefully in a sequence of 1, 2, 3, 4, A, B, C, D, E. If E also executes beautifully, then the fifth wave will definitely be. So please don't miss out on this exciting movement, but remember, it's not quite ready just yet. The chart isn't quite prepared for identifying entry points just yet, but overall I'm definitely keeping a close eye on it. Most often that's exactly how I typically look at charts. I hold on to what I like, then I carefully monitor it and patiently wait for a good entry point. So I'm not buying right now. Let's proceed everyone. Let's take a closer look at the currency exchange market today. So for the currency market, the first instrument is the British pound. This is, dear colleagues, my least favorite trading instrument overall. But a couple of times each year I do engage in trading it. There are certain periods when I notice some particularly interesting trading setups involving the British currency. I try to work them out. Currently, I observe that a clear upward trend is forming right here in this situation. An upward trend typically comprises one strong impulse wave followed by 2 corrective phases, then another impulse wave, another correction, and finally a 5th impulse wave. So basically, this upward movement is coming to an end and the market is transitioning into an ABC correction. The ABC correction consists of wave A, which is precisely located at the Fibonacci 0.618 level. Next, we have wave B, which is corrective in nature, and then we proceed to form a model like this 12. Indicating that this could represent the first and second subwave of the pattern. If the price goes down and breaks this minimum, it will be 3, 4, 5, and that will be wave C. Typically, wave C frequently reaches approximately 50%. According to the wave analysis book, for those who have seen such a starting page, it states in Elliott wave theory that wave C generally reaches the 382 level. Just imagine how this unfolds, but in practice it actually occurs in a somewhat random, unpredictable order. It could be either 618 or 50% or 382, so it's quite a random arrangement. That's why today I discovered an intriguing trading idea and decided to focus my efforts on completing wave B, believing that this represents the first and second subwaves in the overall pattern. I placed a stop just behind the second subwave and I'm currently attempting to sell the British currency during wave C. Look at the math I'm doing. Expectation. I have a short stop profit 120. But this situation will last until the very end of wave C if we carefully count. Also, let's look at the 4-hour time frame, because when you find a pattern on the daily time frame, you must definitely include a lower time frame and trade for a sell, looking for an entry point towards wave C. Let's switch to 4 hours. On the 4-hour time frame, I observe the clear formation of 1, 2, 3, 4, and 5. Which collectively represents the impulse wave 1 in this particular market analysis. Next, this is the second wave of correction, a news-related correction that I call it. Next, I see a bounce from the deep correction at the 236 Fibonacci level. This is a significant correction. This is probably the best correction for wave traders. Do you know why? Many wave traders actively operate based on this market correction, strategically using it as an opportunity for either selling or buying assets. They typically begin selling in this area. They position their stop loss slightly above the beginning of the price impulse, as the correction can vary significantly. Then they work meticulously on the third wave and strategically take positions from 236, specifically from 1 to 4 and from 1 to 5. They exclusively trade only these specific setups. There are other wave traders who begin to build their trading positions from the 382 level. But that position will be less favorable overall because the 236 level offers significantly better risk management and potential profit. 382 won't provide that. A 50% investment will only yield a 1.2 return. Here, the ratio is 1.3, while over there it has reached 1.5. Consequently, I made the decision to attempt selling the British currency right here in this location. I set my stop at the end of the correction instead of above the impulse's start, anticipating it marks the correction's end. I operate under the third wave framework. I consistently perform well using this particular strategy, where my risk exposure per trade amounts to $318. My profit is $24.80. $24.80 is almost 1 to 8. That is 1 to 8. I believe I'm not far behind those skilled traders who consistently trade at 236. I just set a stop at the end of the correction. Well, did it get hit? It got hit. Alright, I'll lose 0.3% or maybe I'll earn 25% here. That's the reason I am attempting to sell the British currency at this time. Also, let's talk a bit more about imbalance. Remember to consider the imbalance, which refers to the unfilled zone, along with the candles and any additions. This is crucial in the strategy. I believe that the price should be placed right here. For those who have studied smart money, I believe you understand that we really need to fill this specific zone effectively. After considering the situation, I believe there will indeed be some profit here, and perhaps I can adjust this position to break even. The significant advantage of my being here is that I can likely set it up to break even effectively. So it's either an upward movement or a continuation of the third wave down. Always strive to trade in a manner that ensures your entry points are of the highest possible quality, allowing the price to move favorably in your direction, which will enable you to confidently set a break-even point for your trades. That is, without arriving late to the market, thereby skillfully avoiding late entry points. Many ask, can we buy gold? I think now gold is not the best entry point for buying compared to last week. So make sure not to overlook any entry points and ensure you enter at the right time. This aspect is extremely important in the realm of trading. Let's sell the pound. We've made $200 in profit already. I shared the analysis in Instagram and Telegram today. Additionally, everyone, it's crucial to effectively manage risks because, as you can see, not all of my trading ideas will yield a full 100% profit every time. I don't know. Many traders tend to overestimate my knowledge and experience, believing that I consistently offer profitable trades every time. No, I will have losses too. That's what happened with Bitcoin, where the stop loss was triggered. So, this is part of trading, but the trading idea remains relevant as there might be an upward movement. To ensure your financial safety, be sure to effectively manage your risk. That's precisely what you need to do when trading based on someone else's signals or investment recommendations. You assume all the potential risks yourself. They conduct the detailed analysis for you, but you must still take responsibility for managing the associated risks. If you don't carefully manage the associated risks, believe me, any investment channel will ultimately lead to financial losses as you aren't controlling the risks effectively. This is the very first essential rule of risk management. Let's move on. The next financial instrument we have to discuss is the euro-dollar. For the euro-dollar pair, guys, the daily time frame is currently forming the first, second, third, fourth, and fifth patterns. The ABC correction follows next. Following that, the cycle completes its course and a new trend begins anew. An upward trend is observed in the sequence 1 to 5. This is the impulse. After the initial impulse move, a typical ABC correction follows. And then we begin the gradual upward movement. We start, but we can't break through the channel. So it won't be a channel breakout that indicates the correction could go even lower. Right now, I'm viewing the euro-dollar in the context that we had the first bounce, then the second bounce, and the trend's third wave will start when we break the channel. I don't think the euro can break the channel that quickly. We might still observe a potential movement downwards here in the market. And this could also be considered possibly the fifth wave down. Why? Here, let's start with the first, then move to the second, followed by the third, the fourth, and now here comes the fifth down. It's similar to the situation we observe with Bitcoin, where I firmly believe that any trend, whether it follows a pattern of ABC or represents something entirely different, can indeed progress in 5 distinct waves. And the fifth wave most often breaks all the scenarios of traders who are already waiting for growth in the euro-dollar within the third wave. That's why I'm trying to sell the euro. I shared a sell trade in the closed channel today. I will most likely consider buying on the breakout of this maximum level, working with 3 shares. For now, I will work on selling. If the euro breaks through the channel once again in the near future, we could potentially see it drop even lower, indicating a mere continuation of the ongoing correction. The correction process will keep going. We are currently pausing euro sales. Next, the 4-hour time frame is currently forming this specific model, which I view from a sales perspective and analyze for potential opportunities and strategies. We need to sell our assets when the overall market structure is also clearly favorable for making sales. Based on the current market structure I'm observing, I interpret the first wave as a strong impulse, followed by the second wave of correction. This movement represents a consolidation occurring within a specific range. And we are also trying to sell aggressively here today while maintaining a tight stop loss to manage our risk effectively. If the anticipated third wave begins now, we may very well continue the market correction process. The correction could still potentially continue. We cannot be certain that the correction is complete. This is the very first scenario I am carefully considering for selling. I would begin purchasing euros when prices rise above this channel. From this point onward, I would consider buying. However, anything below this established channel, I would sell and concentrate on selling. The market may indeed follow the second scenario. However, it is not guaranteed that it will easily generate the third wave that allows everyone to profit from it effectively. It could experience a downward correction before rising again to complete the anticipated third wave. So we will attempt to take this strategic position. The stop loss placement is relatively short in this position, set at 376, and our estimated profit target will be around this level. We will carefully observe and continuously monitor the development of the situation as it unfolds. So guys, the next instrument is the Canadian dollar. About the Canadian dollar, let me take a moment to show you what the market truly is and explain market psychology. I will explain. 4-hour time frame for the Canadian dollar. So along with the traders from my exclusive community and those who actively watch my trading streams, we collectively decided to buy the Canadian dollar. We bought it right here. The stop was initially here, then we decided to move it up here. We are keeping the Canadian dollar until we hit our target. The target is here. After that, we wait 1 full week, then another 2 weeks, and by the end of the second week, news finally arrives and it drops. Profit of $600. At this point, the profit was $1,800, so you need to understand that this is the reality of the market and this will happen periodically. So you can't predict with 100% certainty where to close a position. Sometimes there will be unexpected turns like these that often lead traders to break down their psychological resilience. Traders lose control, immediately think the strategy isn't working or the analysis isn't working, and so on. They start looking for other strategies. And so they are essentially engaged in an eternal search throughout their entire lives for meaning and purpose. That's why I generally take these moments with a more calm and relaxed demeanor. I understand that if the price didn't reach the take profit here and reversed on the news, I'll probably either take a loss or a small profit in this case and work either on selling or in the opposite direction. Let me present the current status of the US dollar compared to the Canadian dollar. You can hold on to your investment and then suddenly with news it can either drop to zero or rise by $600. And then you think to yourself, why didn't I just close the position? I was following the strategy and hoping for even greater profits. The news didn't allow me to take that profit. This situation occurs periodically at various intervals. Therefore, if you believe that you will successfully execute all your trades, such as completing 10 trades and clearly closing all 10 at take profit, it's important to understand that such an ideal strategy does not exist in reality. It just doesn't happen. Many people believe there is a sort of magical strategy involved. No, there are various probabilities along with your own psychology influencing what actions you might take in one scenario versus another. In this case, I continue to hold my purchases, although I was a bit upset that I waited 3 weeks. In the end, we ultimately went down to just one flickering candle. Look, we have the daily time frame now. Here, let's analyze the market again. First, second, third, fourth, fifth. This is a downtrend. After that point, I was generally expecting a typical ABC correction pattern. That is an ABC correction at least to the 6 and 18 level. Typically, after the fifth wave, we commonly observe an ABC correction pattern forming. This ABC correction has essentially begun, but I don't foresee us reaching those specific targets just yet. Additionally, it is worth mentioning that if we were to break this established trend line, the price could potentially decrease once more, retreating down to this significant lower boundary level. For instance, if we happen to bounce off this lower boundary right now, the price could potentially rise. I will continue to increase my profit. I currently have these thoughts. My trading plan focuses on the USD CAD pair. It's somewhat disheartening that after achieving a significant profit, I find myself right back where I started after dedicating 3 weeks to it. Guys, I held this position for 3 weeks and ended up earning nothing. In this environment, the market will thoroughly test your psychology, observing how you'll react in various challenging situations. Such periods will happen quite often. On the 4-hour time frame chart, we can observe the first, second, third, fourth, and fifth significant price movements. Then a downward movement, and again there's the trend line. If we break this established trend line, I will proceed to sell. However, if we bounce off of it, we will likely rise, continuing the fifth wave, and then I will keep buying more. That's why the Canadian dollar is currently in buys. But I'll prepare to sell if there's a break from the trend line, as that would signal the start of an ABC correction. There's also a notable imbalance present in this situation. Again, smart guys, hello everyone. Maybe we'll go here. What are your thoughts on whether we will go here or not? Opt to cover this zone. For now, I'm holding buys. There's still some hope for the existing imbalance, suggesting that we could potentially move to cover this particular price zone. So guys, we have a quick little broadcast scheduled. Many job openings are available. Just a reminder, we currently have a 30% discount on the annual plan. Yearly program details. You also have the option to extend your subscription by paying the difference in cost, or you can choose to purchase the annual plan at an excellent price. By doing so, you will gain access to our exclusive closed community, where I provide daily wave analysis and insights.